the antithesis of every value investor is the fact that you're confronted with value traps. And essentially what it is there's a value opportunity. And what you've got to make a determination about is that a business that will have a turnaround over a short, medium space of time that will ultimately go back to where it was previously, or a better business than what it was previously, and you'll make your money back. Or are you buying a business that's in perennial decline and you end up, as you say, getting caught into that value trap? Every day you've got to make that judgment call with the businesses that you look at. What we try to do with our economic franchise framework is to identify businesses that are more likely to emerge from that value opportunity and grow into the future because of their incumbent positions, because of their economic moat, their stability of historical earnings, the margins, the market leading positions, high return on assets. If you find a business that gets into trouble that it has those characteristics, it's more likely to emerge out the other side. And so, the opportunities that we see today in that space include stocks like, Stericycle, H&R Block, and IGT, the world's largest gaming company. The flip side of that is where do you see when you're confronted with a valuation conundrum, and the question is not really a classic value trap. So, if you look at classic value trap businesses, they're like old school newspapers that got displaced by the internet, Facebook and Google, better offering, a better, just an all-round better proposition for consumer businesses to advertise on. The issue I see over the next 2 to 3 years is possibly the biggest structural value trap that exists today, and one that most investors don't often associate with value traps, is the issue of government. And they are, if you want, the ultimate structural changer. So businesses that are dominant in their fields, like Facebook and Google, our Alphabet, it's the parent of Google, the biggest risk that we see facing their businesses over the next 2 to 3 years is the threat of government insurgency and government breaking them up because of the monopoly characteristics that they have. History's been littered with these examples throughout time. You just have to go back to the railways at the turn of the century. You go back to Standard Oil just after that, and the Rockefeller businesses. In the 70s and 80s, you had the mini bells, which are developed out of AT&T. So once a business becomes dominant, the biggest risk in many cases is not that someone new comes along, is that someone that's been there for all that time and very old, the government, forces you to break up. And I think that's something we need to be careful of. Government influence in markets is something that people have dismissed completely, and I think it's something you've got to be very cautious of.